Delhi for second year MBA from SVC. My topic is investment avenues. Investment avenues. Investment avenues are the different ways that you can invest your money. Financial securities, including equity shares, are one type of investment avenues. Mutual funds, non-securitized financial securities, and the real assets are investment avenues. Shares. Share means a share is a share capital of a company. A company is a business organization. The shares which are issued by companies are of two types: equity shares and preference shares. It is registered as per Companies Act 1956. Every company has share capital. The share capital of a company is divided into a number of equal parts, and each of such part is known as share. A public limited company has to complete three stages. The first is registration, the second is raising capital, and the third is commencement of business. A public limited company issues shares to the public for raising capital. The first public use is known as initial public offerings. Debentures and bonds. A debenture is a document issued by a company as evidence of its certificate issued by a company and its seal debt due by its holders. The term debenture stock bonds and any other securities issued by the Companies Act provides that a company can raise loans from the public by issue of debentures. The debenture holders becomes a creditor of the company. Public deposits. In order to meet temporary financial needs, companies accept deposits from the investors. Such deposits are called public deposits or company fixed deposits under popular, particularly among the middle class investors. Almost all companies collect crores of rupees through such deposits. Companies were offering attractive interest rates previously, however, the interest rates are now reduced considerably. Bank deposits. Investment of surplus money in bank deposits is quite popular. Investors, particularly among salaried people, banks, cooperative and commercial, collect working capital for their business through deposits called bank deposits. The deposits are given by the customers for a specific period and the bank pays interest on them. In India, all type of banks accept deposits by offering interest. The deposits can be accepted from individuals, institutions, and even business enterprises. The business profitability of banks depends on deposit collection. For depositing money in the bank, an investor depositor has to open an account in a bank. Different types of deposit accounts are current account, savings bank account, fixed deposit account, recurring deposit account. Post office savings. Post office savings operates a financial institution. It collects small people through savings bank accounts facility. In addition, deposits and government loans are also collected through post offices. Certain government securities such as Kisan Vikas Patra, National Savings Certificates, etc. are sold through post offices. New schemes are regularly introduced by the postal department in order to collect savings of the people. This includes recurring deposits, monthly income schemes, PPF, and so on. Public Provident Fund (PPF). It is one attractive tax-sheltered investment scheme for middle class and salaried persons. It is even useful to businessmen and higher income earning people. The PPF scheme is very popular among the marginal income taxpayers. The scheme was introduced in 1969. Money market instrument. Money market is a center in which financial institutions join together for the purpose of dealing in financial or monetary assets which may be at maturity. The short term generally means a period of 1 year term near substitutes to money denotes of financial assets quickly converted into money with minimum transaction cost. Mutual fund schemes. Mutual fund is a financial intermediary which collects savings of the people for secure and profitable investment. The main function of mutual fund is to mobilize the savings of the general public and invest them in stock market securities. The entire income of mutual fund is distributed among the investors. The proportion of their investments expenses for managing the fund are charged to the fund. Like mutual funds in India are registered as a trust under the Indian Trust Act. The trustees are appointed and they look after the management of the trust. They decide the investment policy and give the benefit professional investment through mutual funds. Life insurance schemes. Life insurance schemes is more important to person the feeling they're financially secure all the times. Life insurance is contracted by the insurer in consideration of the premium paid either in a periodical installments, undertakes to pay an annuity or certain sum of money either on the death of the insured or the expiry of a certain number of years, whichever is earlier. Investment in real estate. Investment in real estate includes properties like building, industrial land, plantations, farm houses, agricultural land near cities, and flats or houses. Such properties attract the attention of investors. It is an attractive as well as profitable investment avenue today. A residential building represents the most attractive real estate property for majority of investors. The prices of real estate are increasing day by day. Investment in gold, silver. Investment in gold and silver, the precious subjects. Everybody like gold and silver. These two precious metals are used by making and also for investment of surplus funds over a long period of In India, gold is a official deep-rooted mythology. Religious rites is very psychologically. In every family, at least a little quantity of gold and silver is available. Some people buy these metals in investment. The price of gold and silver also increasing continuously. The prices also depends upon demand and supply of gold. The supply has been increasing at low speed. Derivative instruments. A derivative is a product whose value is derived from the value of an underlying asset. Index or preference rate. The underlying asset can be equity, commodity, or any other asset. For example, if the settlement price of a derivative is based on the stock price of a stock. Commodity market. Commodity may be defined as a product of material or any substance like food grains, processed products, and agro-based metals currencies, which investors can trade in the commodity market. One of the characteristics of a commodity is that it's determined as a function of its market as a whole. Well-established physical commodities are actively traded in spot and derivative commodity market. Conclusion. In conclusion, a thoughtful combination of various investment avenues can pave the way of financial success and security. A well-balanced portfolio can mitigate risks and maximize returns. It's crucial to investments with individual goals, risk tolerance, and time horizon, continuous monitoring, and periodic assessment ensure adaptability to changing market conditions. Thank you.